Good morning and welcome to the presentation of Akastor's second quarter results for 2020. My name is Øyvind Påske, I'm the CFO of Akastor, and I'm here today with the Karl Kjelstad, CEO. We will take you through the presentation that has been uploaded to our webpage this morning. The presentation will also be made available through our webcast solution. I would also like to inform you that our half-year report with further details can be found online. Karl will now start by taking you through the main highlights of the quarter before I present the financial results. We will then end with the Q&A session. Please follow the instructions given by the moderator later. I will now leave the word for Karl for the business update. So please, Karl.
Thank you, Øyvind, and good morning to everyone on this call, and thank you for listening to our second quarter earnings. This spring has for sure been different and challenging due to the global COVID-19 pandemic and also the oil price collapse. This creates uncertainty for the whole oil service sector, including our portfolio companies. Due to this, as mentioned in our first quarter earnings call, the result of our companies in 2020 will be different than we planned for when we made the budgets for 2020. However, we are pleased to see that in this challenging environment, the business of our portfolio companies demonstrate that they are quite robust, reflected by that all companies are delivering positive contribution in the second quarter, and that, for example, MHWirth is delivering a solid quarter with an EBITDA of 110 million Norwegian kroner. Further, MHWirth service business DLS continues to serve its clients despite travel restrictions, and MHWirth are able to keep good progress in project despite that most of MHWirth engineers have been working from home most of the second quarter. AKKVF have had some COVID-19 related delays in the testing of the seafarer for the Equinor project and also in Brazil, but all in all manageable in close cooperation with our clients. AGR have demonstrated its flexible cost base and deliver positive results despite a challenging market. However, the level of impact from the COVID-19 pandemic and the oil price collapse will continue to create uncertainties for the remainder of 2020, and we expect also into 2021. The level of impact from but first let us start with some key numbers from our second quarter. Slide 3 in our presentation. Year on year, we saw some decline this quarter with a revenue decline of 4%, resulting in a revenue of 1.3 billion Norwegian kroner. With an EBITDA result of 70 million, a decline of 38%. But if we adjust for a non-recurring M&A related project cost of 43 million, year on year EBITDA is on the same level as previous years. Our net interest-bearing debt increased with 100 million NOK to 1.5 billion in this quarter, affected by conversion of a receivable towards AKKVF's offshore into equity. Let's move to slide 5. Our portfolio, there are no change in the last quarter, and let me then share some updates on our industrial holdings, but first some update regarding impact on our business from the COVID-19, slide 6. The COVID-19 situation has been challenging for all of our portfolio companies, but we have been able to manage it efficiently and keep operations going. Key priority has been to protect our people and to ensure that all portfolio companies have been able to serve its clients in a swift manner in a challenging situation. In fact, I am impressed and proud on how our portfolio companies, organizations have been able to handle the COVID-19 situation and continue to serve all our clients. However, we see that the COVID-19 pandemic is impacting the demand for our company services and products. As an example, MHWirth has seen a decline in product order intake, and the lockdown in Singapore, for example, have also been challenging for the new building projects that takes place there. But MHWirth financial performance in the quarter is, as mentioned, despite this, solid. In Brazil, the COVID-19 situation in the country is very challenging. And we have had COVID-19 outbreak on one of the vessels, the Wayfarer vessel, resulting in a disruption of operation and 17 days of off-hire in the quarter. However, AKKO's COVID-19 outbreak response procedures has worked well, and AKKOs were able to swiftly change personnel and disinfect the vessel. We are also continuing to adjust the cost base in our portfolio companies to the new market conditions. And currently we have about 300 less full-time employees than we had before the COVID-19 outbreak. This is a reduction in the workforce about 15% in our portfolio companies. We will continue to adapt our business to the market going forward, and we expect, as mentioned, uncertainties to continue through 2020. Let's move to slide 7. Our key assets continue to be MHWirt, that per the second quarter was 61% of our capital employed. Our strategy with regards to build a wider and bigger MHWirt remains, but as mentioned previously, for us to do cash acquisition in the current market is not very likely. For AKKO's Offshore, we are pleased with that all 3 vessels have contracts, and our key priority going forward is to maintain all vessels on contract. We continue to have a predictable 10% return on our preferred equity in Odfjell, and are pleased with that Odfjell maintains a strong order book and one of the most robust balance sheets in the drilling industry. NES Global Talent staffing business have a big exposure towards the oil and gas industry. It's about 80% of the revenue, and we therefore, as expected, saw a lower activity for NES in the second quarter. Temporary staffing is the first to be hit when the market declines, but the positive flip side of that is that temporary staffing is also the first to increase when the market picks up again. Let me then share some reflections on our portfolio company, and starting with MHWirt on slide 8. All of MHWirt's 4 main business streams, projects, the service business DLS, the products business, and the digital technology, were to different degree affected by the COVID-19 pandemic. For the product business, the activity will, due to the existing order book, be good also through 2020. However, at the lower revenue level in the second half of this year, based on the progress plans we have. MHWirt needs new orders in 2020 for keeping the activity level for the product business in 2021. We are focusing our efforts on niche projects where there are some demand that is not linked to general drilling market. For the ongoing projects, we see that there is a risk for that progress on project can be hampered by the COVID-19 related restrictions. I mentioned the lockdown in Singapore, for example. But the new building project in Keppel continues, and MHWirt's contract is for those 2 new buildings there are with the Keppel yard, and we expect that both rigs to be carried through. However, the current lack of an end customer for the first rig could affect the progress plan for that project. We saw a reduced order intake in the second quarter for our single equipment business. We expect the oil-related single equipment product sale to be negatively affected also going forward, while we expect that non-oil related products to be less impacted. DLS, our service business, is currently supporting the 47 rigs we have in operations in average in the quarter, and this is 4 rig less than we had in the first quarter on average. Our total installed base remains the same as the first quarter, 83 rigs that has MHWirt equipment. The service business had a relatively high activity in this quarter, with the revenues from this segment more or less on the same level as we saw in the first quarter. We expect the service activity to be strong also in the third quarter, however, with increased risk related to the number of active units. Last but not least, our digital technology business continued to have a very high activity level in the quarter, focusing on delivering the order book. However, with a weak market affecting sales opportunities for new software packages. We also saw a suspension of 2 software packages that was in the order book from a US client. Let us move to slide 9 and some words about the other companies in our portfolio. AKKV Offshore's Santos vessel in Brazil delivered solid operations in the quarter. We are very pleased with a revenue utilization of 99% of the Santos vessel in the second quarter. AKKVF had, as mentioned, reduced revenue due to the COVID-19 outbreak on board. That gave an utilization of 83%, caused by the 17 days downtime in June. Seafarer vessel continues to prepare for the 5-year contract with Equinor, with a planned commencement in August that have been affected by the COVID-19 delays. On a 100% basis, AKKV Offshore delivered an EBITDA in the second quarter of 83 million NOK. AGR continued the positive trend, but was also affected by the COVID-19 situation. But we are happy to see that despite this, AGR is delivering a positive EBITDA of 5 million NOK from the revenue base of 157, made possible by the flexible cost base and a prudent follow-up by the AGR management. Kuhl's option performance continues to be driven by the Nord project that was delivered in June, and activity level post the Nord project is more uncertain due to the current weak market. Our financial investment in Awilco saw a decline in the share value of 23% in the quarter, and the share price development will probably be dependent on the contract opportunities for the new building program and the project execution of that program. The first rig was, as mentioned, the Nordic Winter, have been terminated by Awilco, and where there is, up to now, an unresolved dispute between Awilco and Keppel. DOF Deepwater activity has been heavily affected by the turmoil in the market, and all the 5 anchor handlers the company have is now at port. In this quarter, Akastor, we have been taking part in discussions with DOF Deepwater's creditors on a possible restructuring of DOF Deepwater. We expect these discussions to be concluded during the third quarter this year. NES Global Talent, as mentioned, reduced activity, but adapting to the new market is very well handled by the NES management, and we believe, in fact, that NES market position as the global leader of staffing to oil-related industries, in fact, will be strengthened in this market. Odfjell continues to demonstrate that it's a robust company, and this is also reflected in the positive development in the share price in the second quarter that saw an uplift of 40% in the quarter, 44%. Then, Øyvind, could you please take us through more details regarding to our solid second quarter performance?
Thank you, Karl. I will then take you through the figures for the second quarter, starting at slide 11. Given the circumstances, and as Karl has already mentioned, we are quite pleased with the activity level in the quarter. Total revenue declined by only 4% year-over-year, explained by slightly lower activity in MHWirth, however demonstrating the robustness of the service business of that company. The EBITDA in the quarter was 70 million, down from 114 million in the second quarter last year. EBITDA in this quarter includes extraordinary M&A cost of 43 million related to a specific ongoing process, and thus underlying EBITDA for the quarter was 113 million, in line with second quarter last year. Net financial items contributed positively this quarter with 46 million, driven by positive FX effects related to our US dollar debt. I will get back to the further details here on the next page. Net income in the quarter was positive 16 million. Order intake in Q2 came in at 1.2 billion, consisting mainly of service orders, giving a book-to-bill of only slightly below 1 time recurring revenues in the quarter. I will then turn to page 12 to look further into the details. MHWirt constituted around 80% of revenues in the quarter, a reduction of 3% year-over-year. AGR and co-absorption continued to contribute positively in the quarter despite the challenging market conditions. As you are aware, AKKVF Offshore is not consolidated into Akastor. However, the company delivered lower revenues than last year, partly due to the before-mentioned downtime on Wayfarer related to the COVID outbreak on board. Under net financial items, the preferred equity instrument in Odfjell Drilling contributed positively with 19 million related to received dividends, of which half has cash effect. In the quarter, we here also had a positive effect on the warrant structure with 12 million after an updated valuation based on share price development in the quarter. We had a negative effect on the Wilco investment of 4 million due to decline in share price over the period. Our share of net profit in DOF Deepwater and AKKVF Offshore contributed negatively with 4 million and 23 million respectively, driven by the operational results of the two companies. Net foreign exchange effects in the quarter was positive with 63 million, primarily driven by effects related to our bank financing in US dollars through the strengthening of the NOK in the quarter, partly mitigated by negative effects related to our US dollar assets, NES and Odfjell. If we then turn to the next page, slide 13, you can here see that our net bank debt decreased by 42 million in the quarter. This movement included positive effects from FX of 157 million. Net interest-bearing debt increased by 100 million to 1.5 billion, affected by conversion of a portion of the outstanding receivable towards AKKV's to equity as part of a smaller refinancing of the company. This transaction did not have cash effect for Akastor. Cash flow from operations in the quarter was affected by a continued high level of working capital in MHWirt, specifically related to the Wilco projects. We expect this to reverse in Q3. On slide 14, you see that MHWirt's share of total net capital employed continued to constitute around 60% of the total per end of the quarter. The booked value of AKKV's increased with 73 million during the quarter as a result of equity injections and conversion of receivables as mentioned as part of the refinancing. Book value of NES decreased with 59 million compared to Q1, primarily driven by FX effects as this is a US asset. The other segment here includes our provision related to DOF Deepwater, where Akastor guarantees for 50% of the debt in the company. This commitment was booked with a value of 237 million per end of the quarter, at same level as per Q1. This equals 50% of the negative equity value in the company, resulting from lower vessel values compared to the debt in DOF Deepwater. Per end of the quarter, the market valuation represented a discount to book values of around 70%, slightly decreased through Q2. If we then turn to page 15, I will provide some further details on MHWirt. As mentioned, we are quite happy with the performance of MH in the quarter, given the circumstances and market climate. The decline in total revenues was 3% versus second quarter last year and 9% versus first quarter this year. Projects and products accounted for 493 million in the quarter, or 47%. This segment thus recorded a decline of 8% compared to second quarter last year, driven by lower revenues from sale of single equipment. The difference versus first quarter this year was also a decline of 8%, but mainly a result of lower recorded project progress in line with the total progress plan. The service and digital business recorded revenues of 559 million in Q2, on par with same quarter last year, including lower revenues from digital technologies, mitigated by higher revenues than last year from traditional aftermarket services. Versus Q1 this year, revenues for Q2 for the service business represented a reduction of 10%, explained by lower activity in general and partly affected by travel restrictions, but mitigated with an active spare part and overall business, especially out of Norway in the quarter. As Karl mentioned, the number of active units fell back with 4 rigs during the quarter as certain contracts expired and were not renewed. Based on the current contract schedule of the fleet, this figure could fall back with a few units also in the second half of the year. However, based on the quality of the installed base, we do believe MH has a solid base for growth once the market stabilizes. The number of cold stacked rigs remained stable at 16 units over the quarter. Going forward, and as mentioned also last quarter, project revenues will drop in the second half of this year as a result of phasing of the current backlog and low order intake within this segment in 2020. We also expect sale of single equipment to go down in 2020 compared to last year on the back of the market conditions and order intake situation. MHW's service business is dependent on long-term rig activity and more specifically the number of active units with MHW drilling equipment package. As mentioned, we see a risk for further decline in the shorter term, however with a solid base for growth once the market turns. Then over to AKKVF Offshore on slide 16. Again, AKKVF is not consolidated into the Akastor's financials. However, the company delivered a revenue of 201 million and an EBITDA of 83 million in the quarter. This represented a revenue reduction of around 15% year-over-year, a result of adjusted terms on the Santos contract from March this year, as well as the utilization effect on Wayfarer in June following the mentioned outbreak of COVID-19 that led to 17 days of downtime in the quarter. Skandi Santos operated with 99% revenue utilization through the quarter. As also mentioned by Karl, Seafarer is currently at the yard undergoing its final preparation for the Equinor contract, which is now expected to commence in August, from which she will contribute positively to the AKKVF's financials. I will then turn to page 17. NES continues to be impacted negatively by the market turmoil and has over the last couple of months been experiencing a decline in number of contractors going through their books and thus a declining last 12 months run rate. On this basis, we do expect revenues and nominal EBITDA to come in at a lower level in 2020 than last year. However, NES has a flexible cost base, and we are happy to see that the company is able to maintain its margin levels, demonstrating the robustness of their service business model. Also, during the quarter, NES delivered solid cash flow through collection of working capital, reducing net debt of the company. Per Q2, Akastor's ownership in NES has a book value of 586 million, which is based on updated earning estimates. Then over to slide 18. Our other holdings include AGR and Kjelstad. We are happy with the performance of AGR in the second quarter, which delivered positive contribution despite a significant reduction in activity and revenue. The company has and continue to have a strong focus on cost control and cash flow generation, and restructured their operations in US and UK during the quarter. AGR delivered revenues of 157 million and an EBITDA of 5 million in 2Q. Going forward, we expect activity level to continue on a lower level than pre-COVID. Kjelstad delivered a quarter in line with last year, primarily driven by the Njord project delivered to Equinor in June. With that, we are through our Q2 presentation, and I will then hand it over to the operator of the call to facilitate the Q&A session. So please.
Thank you. Ladies and gentlemen, if you have a question for the speakers, please press 5 star on your telephone keypad now. We will have a brief pause while questions are being registered. And we have our first question from Mr. Limmer from Carnegie. Please go ahead. Your line will now be unmuted.
Yes, good morning. Just a question on the M&A process. Has this been ongoing for some time? Did it start and end this quarter? Is it completely dead? Are you looking to buy or sell? Can you give any sort of flavor on this line?
We are very cautious about commenting on ongoing M&A projects, and the reason why we had in a way to mention it this quarter is due to accounting rules. We had to book the cost, but what I can say is that it's an ongoing M&A project, and that's all I can say.
Okay, thank you.
And as a reminder, please press 5 star if you have a question for the speakers. Our next question is coming from Mr. Nanton from ABG. Please go ahead. Your line will now be unmuted.
Good morning, guys. Håkon from ABG. Yeah, good morning, guys. Håkon from ABG. I was going to ask the same as Frederick, but maybe you can give some more color on the refinancing of AKKVF, please.
Yes. So as you know, we have had a historical receivable towards AKKVF for some time. During the second quarter, we together with the owners decided to inject some cash, and we contributed with a conversion of our receivable, thus strengthening the equity in AKKVF. We converted around $13 million, and our other partner contributed with the same then in cash, so in order to align our holding. That's basically the basis, injecting some cash into AKKVF Offshore.
All right, thank you. And just finally, do you expect to have some extraordinary charges in the coming quarters from capacity reductions in MHV, or how should we think about the cost reduction that may be necessary there?
Yeah, we have not had any specific non-recurring costs related to COVID and restructuring of the business in MH so far, primarily driven by the fact that our layoff so far has been mostly temporary. Then, of course, we have to assess that continuously, and there could be restructuring costs if the situation remains and activity level stays low for a long time. However, we do hope that we will be able to use the mechanisms in place to ensure flexibility also going forward.
Okay, thank you. That's pretty clear. That's it for me.
And as a last reminder, please press 5 star if you have a question for the speakers. As there are no more questions, I will hand it back to the speakers.
Thank you. I would like to thank you all for your attention, and we wish you a good summer, and welcome back for our presentation of the third quarter results on October 30th. So thank you very much, and have a good summer.